Hey everyone, welcome back. IREN released its Q2 FY26 earnings yesterday, February 5th, 2026, and the stock reacted sharply, dropping roughly 15 to 20% in the immediate aftermath as the market digested the mining to AI transition pain. But today we're already seeing a solid rebound, up several percent in early trading, which is classic IREN volatility. Let's jump straight into the key highlights: the results, the 2026 guidance, realistic outlook, and a valuation look through ARR multiples compared to peers and history. As always, this is just the facts and context, no investment advice here. The quarter showed clear signs of the pivot. Revenue came in at $184.7 million, down from $240.3 million in Q1, largely because mining capacity was intentionally reduced to prioritize higher-margin AI cloud. Net loss was $155.4 million versus profit last quarter, driven by non-cash items, including $31.8 million in mining hardware impairments and unrealized financial losses. Adjusted EBITDA was $75.3 million, down from $91.7 million. On the positive side, cash position strengthened to $2.8 billion as of January 31st, and they secured $3.6 billion in low-cost GPU financing under 6% interest to fund the Microsoft deal, covering 95% of GPU capex with prepayments. The big story is the 2026 outlook. Management is targeting $3.4 billion in ARR by the end of calendar 2026, powered by scaling to 140,000 GPUs from 23,000 now. That's built on the $1.9 billion average annual revenue from the Microsoft contract, plus $1.5 billion from an additional 63,000 GPUs in British Columbia. Current contracted ARR stands at $2.3 billion, with Prince George already contributing $0.4 billion and more negotiations in progress, supporting over $0.5 billion. They also announced the new 1.6 gigawatts Oklahoma campus, pushing secured power to over 4.5 gigawatts, though the big power ramps kick in from 2028 onward. On valuation, let's focus on ARR to market cap ratios, which are standard for AI pivoting miners and cloud players. IREN's current market cap is around $13 to $14 billion, based on recent trading around $39 to $43 post-rebound. With contracted ARR at $2.3 billion, that's an MC ARR of about 5.7 to 6x. At the $3.4 billion target, forward MC ARR drops to roughly 3.84.1x. Looking at peers, Core Scientific trades at 8x on its AI ARR targets, Hut 8 around 12x, Cypher Mining 7x on projected sales, and CleanSpark higher at 20x on smaller AI exposure. In 2024 to 2025 hype phases, these multiples frequently hit 8 to 15x during peaks, and contracted to 5 to 8x in dips, similar to where IREN sits now on contracted ARR. Applying a reasonable 6-10x MC bet, ARR range, peer average, and historical midpoint to the contracted $2.3 billion ARR implies a market cap of $13.8 to $23 billion right now, translating to roughly $42 to $70 per share based on 328 to 340 million shares outstanding. For the $3.4 billion target ARR, that same 6 to 10x range points to $20 to $34 billion market cap, or $62 to $103 per share by end 2026. Current levels are at the lower end of historical peer ratios on contracted ARR, which looks reasonable if execution delivers, but watch for over-optimism pushing it higher in momentum phases. Q2 highlighted transition costs, but the financing win and $3.4 billion ARR target keep the AI pivot firmly on track. 2026 guidance is achievable with clear upside if IREN maintains its execution strength. One earnings dip doesn't change the bigger picture. If GPU ramps and contracts materialize in this booming AI market, the path to significantly higher value remains wide open. Volatility is just part of the ride for these names. What do you think? Will IREN hit or exceed that ARR target? Drop your takes below, like if this recap helped, and subscribe for the next update. Catch you soon. Stay sharp.